Okay, let's unpack this. Bitcoin just blasted past $105,000.
Right.
And the whole crypto market is now, what, a staggering $3.63 trillion?
That's the number. It's not just a small hop, like you said.
Exactly. It's a significant leap, happened pretty quickly, too. So what's actually going on here?
It certainly is a notable event. I mean, when you think about a 3.12% expansion, that sounds maybe small, but in a base of trillions, well, it signals a real surge of interest. Capital's flowing in.
For sure. And that's a core question we're diving into today, isn't it? What's the real driving force? Is it speculation tied to the upcoming inauguration? President-elect Trump, January 20th, 2025. That whole Trump pump idea.
That's one theory floating around, definitely.
Or is it something maybe more fundamental, like are major institutions finally making serious moves?
The institutional adoption narrative, yeah.
So we've looked through the recent news, trying to pull out the key bits for you, the listener, help you understand what's fueling this without getting, totally bogged down.
Yeah, there are some pretty compelling data points to look at. Maybe we should start with the specifics. The price action itself.
Good idea.
So Bitcoin reached an intraday peak, $105,246. That was Friday.
Okay.
And as you mentioned, the total market cap grew to $3.63 trillion. That kind of quick climb for a major asset like Bitcoin. It often flags a shift in market sentiment, wouldn't you say?
Absolutely. And it wasn't just Bitcoin moving, right? Ethereum was up, but more modestly, like 2.8%.
Yeah, more steady. But Dogecoin, that really stood out among the top 10.
How much was that?
It jumped 8.34%, led the pack there.
Because, okay, Doge doing Doge things. But here's where it gets wild, I thought. Beyond the big names, some really explosive growth. Septum Park 6,900, for instance, up over 41%.
Whoa.
Yeah. What does that kind of crazy movement tell us?
Well, gains like that, especially in less established tokens, often reflect a, shall we say, higher appetite for risk in the market.
Speculation running hot.
Could be. We also saw big jumps in others, like Check's token was up almost 25%. Even one called, get this, Fartcoin, yeah, up 22%. And FLR, PopChat, OKB all saw pretty chunky double-digit gains, too.
So it suggests maybe that while Bitcoin's leading, there's this broader wave activity spreading out.
Exactly. Maybe some speculative froth extending across different bits of the crypto market.
Right. But it's crypto, so it wasn't all sunshine and massive gains, was it? We saw some serious drops, too.
That's a crucial point. You definitely saw the other side of that volatility coin. Assets like AR Rig Complex, ARC.
Down how much?
Down over 17%, almost 18%. Freza, AII, FAI, down over 14%. XDC, down over 12%. AI16Z, AIXBT also saw big losses.
So it really underscores the risk, doesn't it? Even when the headlines are all about the surge.
Absolutely. It's a constant reminder. Big gains can come with, well, the potential for big losses, too.
And those wild swings, they had a real tangible impact on traders, didn't they? The liquidations, that number was huge. Maybe explain that for folks who might be newer to this.
Sure. So when traders use derivatives, they're basically placing bets on where the price will go, often with borrowed money, which is leverage.
Amplifies everything.
Right. Gains and losses. So if the price moves sharply against your bet, boom, you get liquidated, your position is closed, capital's gone.
And in this recent surge,
we saw a massive $270.83 million in crypto derivative positions just wiped out.
Wow.
And what's really striking is that a big slice of that, almost $160 million, were short positions.
People betting the price would go down.
Exactly. They were betting on a drop and got caught completely off guard by this pump. Bitcoin shorts alone were over $75 million of that.
That's a lot of wrong bets, and it hit a lot of individual traders.
Oh, yeah. The number of traders liquidated was over 87,000 in just one day.
87,000.
Yeah. And to put a finer point on it, there was one single liquidation on Binance, a Bitcoin position. Over $6 million lost by one trader.
Ouch. That really drives home the risk, the real money involved in these swings.
It absolutely does. Leverage trading in this market is not for the faint of heart.
Okay, so dramatic price action, super volatile environment, lots of liquidations. Got it. Now, let's dig into those potential drivers. First one, the Trump pump. What's the actual thinking there?
Well, the hypothesis is basically rooted in expectation, right? The idea that a Trump administration might bring more favorable regulations for crypto, or maybe even actively support its growth somehow.
Based on?
Well, based on some of his past comments, maybe, and just general optimism among certain crypto circles about his potential stance. So there's speculation about positive policy shifts after he takes office in January.
So the market's kind of front-running potential good news?
Essentially, yeah. reacting to the perceived possibility of a more crypto-friendly environment down the road.
And this is leading to some pretty ambitious ideas making the rounds. Like I heard talk about the U.S. government potentially holding Bitcoin itself as a strategic reserve. That sounds pretty out there to me.
It might sound out there, yeah, but it just shows the level of expectation, maybe even hype, that's building, the scope of potential policy changes people are dreaming up. Even just the suggestion of something that significant, like a U.S. Bitcoin reserve, can pull speculative money into the market. Investors trying to get ahead of what might happen.
So the Trump pump isn't just about him. It's about the market reacting to potential regulatory winds changing direction.
Precisely. It's market sensitivity to potential political or regulatory shifts.
Okay, so that's one strong potential force.
Yeah.
But then there's this other big narrative gaining steam. Institutional investors. The idea that the big money, the serious players, are finally coming in.
Yeah, and this view has some weight behind it. We're hearing it from industry folks, like Korosh Kanlu. He's director of corporate strategy over at Tradu.com.
Okay, what's he saying?
He's on record saying institutional adoption is, quote, accelerating rapidly. And he believes this is a key driver of the price rise. He sees it as a more fundamental shift.
Right, not just speculation, but actual significant money moving. What's his reasoning? Why is he so sure it's institutions?
Well, he points to a few things. First, just the sheer volume of money flowing in through institutional channels. He says it's substantial. We're not talking small retail buys.
Big blocks of capital.
Exactly. Second, he highlights that major established financial institutions are getting involved, the household names. Their participation adds a layer of legitimacy, makes crypto more palatable for others.
Makes sense. Less Wild West.
Kind of. And maybe the most telling point he makes. Even traditionally super risk-averse players, like pension funds, are apparently starting to allocate some capital to Bitcoin.
Wait, pension funds? For real?
That's what he suggests. Drawn in by the recent returns and the potential upside, if pension funds are seriously considering Bitcoin, well, that's a massive psychological shift, isn't it?
Huge. That moves Bitcoin from, like, niche internet money to something potentially considered by the most conservative long-term investors. That's wow.
It signifies a major potential turning point in perception, definitely.
Okay, so that's a powerful narrative. Pension funds getting in suggests a real change. But are there, like, market indicators? Things we can look at to see if this is more hype or actual sustained institutional buying?
Yeah, there are a couple we can glance at. The Coinbase Premium Index and Gap, for instance. Sometimes it gives clues.
How does that work, basically?
It looks at the price difference for Bitcoin on Coinbase versus other exchanges, like Binance. A premium Coinbase price being higher often suggests strong buying from U.S. institutions because they tend to use Coinbase Pro.
And a discount means?
Less buying pressure from them, maybe even selling. So what we saw was interesting. Back on January 14th, the index did briefly flip into a premium zone.
Ah, so maybe some institutional buying then.
Possibly, but
Yeah.
it didn't last.
Oh.
It's since gone back to a discount, which might suggest that initial burst of buying wasn't really sustained, at least not consistently through that channel.
Okay, so a flicker of a signal, but maybe not a raging fire just yet. What about other regions? You mentioned something about South Korea.
Yet, data from CryptoQuant suggests that South Korean exchanges are actually showing a premium right now, about 0.95% for Bitcoin.
So, stronger buying pressure there.
Seems like it. It suggests maybe different market sentiment or dynamics in Korea compared to the U.S. right now. Markets aren't always monolithic globally.
Right, good point. So, putting it all together, it sounds complicated. We've got this Trump pump speculation buzzing around, maybe pulling some money in. And at the same time, there's this story of accelerating institutional interest, maybe adding more fundamental support. It feels hard to say definitively, this is the main reason.
Precisely. Market moves, especially big ones, are rarely down to just one thing. It's highly probable, I'd say, that both the anticipation around potential policy changes and the growing institutional presence are contributing.
Feeding off each other, maybe?
That's entirely possible. Positive sentiment from one angle could easily reinforce the other. It's a complex interplay driving things right now.
Okay, so quick recap for you, the listener. We've seen Bitcoin surge, dragging the whole crypto market up past $3.6 trillion. Two big potential reasons we explored. One, the speculative buzz around the incoming Trump administration, the Trump pump.
Right.
And two, the maybe more solid trend of institutional investors warming up to crypto, maybe even accelerating their entry.
And we look at some indicators, like the Coinbase Premium, which gave a mixed signal, and the South Korean premium showing regional differences.
Yeah, offering clues, but no single smoking gun telling us which factor is dominant.
That sums it up well. It's always tough to isolate the exact cause and effect in markets like this. The evidence suggests both political speculation and institutional shifts are likely in the mix.
Absolutely. So the final thought, then, for you to ponder, as this whole situation evolves in the coming weeks, especially around and after January 20th, 2025, what should you be watching most closely?
Good question. What signals will be most telling?
Will it be concrete policy news, or even just hints coming out of the new administration about their crypto stance? Or will it be the drumbeat of news about more big financial players, more pension funds actually putting money into crypto?
Keep an eye on both, I'd say.
Yeah, because watching both those threads develop will probably give us the best sense of whether this current crypto rally has real legs, real staying power, or if it's more of a short-term burst of excitement.